What's going on, guys? I feel like the Bulls can finally start to celebrate. I don't want to celebrate too easy, but today wasn't, an incredible day, right? I mean, I feel like for so long we've been really waiting for this, but did Jay Powell, did the Fed, did they really just bail out the entire stock market? Are we going to continue to rise higher? Or is the lows in? Is that it? This go time, baby. It's time to go all risk on. We're going to discuss that. We're going to go over some charts. We're going to look at the indexes. We're going to look at the SPYs. We're going to look at the Qs. I'm going to get to those charts in just a minute here, but I was talking with some of the guys here on the Discord community early in the morning, and the market really wasn't doing anything for the first few hours, right? It was very, very slow. It was very sluggish. Not a lot of good price action. Some of the stocks were just going sideways. Some stocks were just kind of slowly grinding higher. I really wanted to wait for, to see what they were going to say. I wanted to see what Powell was going to say. It was expected. We got that 0.25 hike, right? And it was really after he started talking when the market started to just absolutely explode and realistically move. Move, right? So we're going to get into the charts here. We're going to do the whole total recap of all of the stocks here that I like to watch and trade and things that I'm going to be keeping on watch for the end of this week and next week. And we're going to go ahead and get into those now. First things first, we're going to look at the Triple Qs ETF. Now, the reason why I start off with the Triple Qs and not the S&P 500 is because 99% of the stocks that I personally trade are located within inside the NASDAQ 100. So that's why I like to follow this ETF. I like to know what big tech is doing. I like to know what growth is doing. That's why we're going to look at it here. But if I kind of just zoom out, right, we're looking at the daily chart. If I kind of just zoom out here, this is the first time that we have closed and builded over the 200-day moving average in over a year, okay? So, a very, very long time. If I go all the way back here on my daily chart, right? Going all the way back to last year, we have never traded over the 200-day moving average. Is the big market cycle, the big bear market cycle, is it finally over? We've cracked through that level. We've broken the downtrend. We're now starting to build over the 200-day moving average. This is extremely bullish, guys. Now, does that mean we're not going to see a red day? Does that mean we're not going to have a weak pullback? Does that mean that we're not going to have another downtick? Of course not. But what it means is very, very exciting for the bulls. What it means is that now those pullbacks, now those red days are just rest days. They're just consolidation days for the next move higher, right? As long as we don't lose the 50-day moving average, which is sitting right now at a price of $280, this is getting ready to just grind higher for the remaining of the year, okay? And I'm confident to say that all bets are off when we lose the 50-day moving average, okay? Now, does that mean that there's going to be no money for the bears to make because they can't short? Of course not, guys. We're going to get days where we gap up. You can short the tops, short the gap ups. There's going to be days where we have $1, $2, $3 pullbacks in stocks like Tesla or Nvidia intraday. You're going to be able to take advantage of those moves as well. So the bears are always going to consistently make money. It just means that the bulls are going to have more control of that shorter term trend on a day-to-day basis in order for us to make more money going up. So if I kind of zoom back in here on this chart, and let me kind of zoom this over so you guys can see this a little bit better here. But if you kind of look back here on your daily charts going back to the 27th, this was the first day that we closed over the 200-day moving average, right? The 26th and 27th, we got that first close over the 200, and then we had a nice little pullback here. It was right in this time, a lot of us were kind of thinking, maybe we do pull back into some of these lower supports, 289, potentially 285, would have been a healthier back test. And we consolidated for 3 days, and then we just absolutely exploded on this news. Now, okay, don't get too excited. That does not mean that we don't put it in an inside bar day tomorrow and close at 296, right? Go down $4. Everyone's going to say, oh, that's it, the rally's over. Guys, with such a move that we had today, it's to be expected that we get a pullback. Even if you look at the initial run that we've had from realistically the big engulfing green candle on the 6th of January, we have not had a downtick. There has not been a substantial kind of pullback. Now, our pullback zone is going to be 1, 2, 3 peaks here. This zone here between 290 and around 295 is going to act as new support, okay? If it doesn't, then we got bigger problems. But if 290 to 295 does not act as support, like I said, we've got bigger problems. We'll go ahead and do some analysis on that. But as of right now, what I'm looking for is maybe even if we do push a little higher or we do go sideways, I would look for that pullback into that zone. And if I kind of bring out my drawing tool here so we can kind of see, this is what I would be expecting to see here, right? Pull back into this zone, either chop around and then push higher, right? If we do that, then that's what we want to see. I'm going to draw a trend line here, these three tops. This is the price, even if we do push a little bit higher and then pull back, as long as we don't start to lose all of this support here, we can do whatever we want here, but the move is still going to go up, guys, and we can finally break that downtrend. Now, if we do want to see something happen, the bears want to see it go their way, and something significant happen in the market, what we would need to see is some sort of consolidation and then a breakdown. And when we break down below these three troughs here on that next bounce, what we're going to need to see is that rejection and then the loss of the 50-day moving average. Now, if we lose the loss of the 50-day moving average, that means that, yes, we could be looking at an extended move down. That's how that will play out. But as of right now, the bulls have to be very, very excited. I'm going to go over here to my weekly time frame chart. I'm going to kind of look at the next macro area of supply here, so you can see kind of where we ran into. We ran into the weekly 100 EMA. That's sitting at around 304. Over 304, we're looking at a 311, 310 price target. It is what it is. Chips in the middle of the table, risk on, we're looking at 310, 311. I would expect it to chop around there and then back test, okay? Let's quickly take a look at the SPYs, look at the spiders really quickly from a weekly overview here. Their next major kind of supply zone is the 100 simple moving average, sitting at around 420. I would expect to get to 420 before we see some sort of significant back test. Now, again, just keep in mind, that does not mean that we are not going to pull back tomorrow, right? So we could do something like this where we put in an inside bar day and then boom, pull back, and everyone thinks that the run is over. It traps all of the shorts here and then starts to explode towards that 420. That's exactly what I would be looking at here. Still for the SPYs, they're going to need to get over, these kind of peaks here, this peak here. We're going to really need to close over 420. The SPYs start to close over 420. We're on an upwards trajectory where you're going to want to push all chips to the table because it's going to look like we're going to hit 440, 450. That is what it is. That's the price target for the next 6 to 12 months. That's what I would be looking for, somewhere around 440. 450, somewhere in that zone. So now we're going to take a look at some of the stocks that I like to trade. We're going to get an overview on their weekly time frames here, and I'm going to delete some of my day trading levels here just so we can make it a little bit more clear. I already have enough lines on the chart as is. So if we kind of look at where we're at now, look at the weekly chart on Tesla, guys. It is kind of bull flagging right here on the weekly time frame. We're kind of pinned right under supply here at the 20-day moving average on the weekly time frame, as well as the 200 EMA. Over today's highs, 184, it's got a clear shot to 211. This is the next price target on Tesla I'm looking for, is 211. I'm not going to be too concerned on Tesla to the downside until we lose 162 and 145. There is no short position for me on Tesla until we lose 162 or 145. Everything else is bullish, and I'm looking for a $200 to $210 price target. Semiconductors, I traded NVIDIA today, was an absolute monster of a rock star. I love the weekly chart here. NVIDIA looks very, very good on a weekly time frame. If I kind of zoom this in a little bit more so we can see it here, look at how this hammer candle is taking out last week's price action here. We've got a clean stretch up to 221 on NVIDIA, and we've taken out months and months and months, almost a year's worth of price action. All of this downward move, all of this consolidation, all of this distribution from lows of 109 to highs of 190. We've been in this zone for over a year. We're finally starting to break out. Extremely bullish. I'm not concerned on NVIDIA until we lose 181 and 171. Guys, ignore any red days, ignore any pull days. It does not mean the market is going lower. Now that we are over some of these moving averages, we're over the 200-day moving average, a pullback is just a rest. It's a rest until we lose the 50-day moving average on the triple Qs. And until we do that, we are bullish. It is bullish season. It is bull season, blah, 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 blah. We're going to get opportunities to short. Don't get me wrong. It does not mean that 100% of my trades are going to be long biased. I will still short when the opportunity presents itself. Do not get me wrong and do not confuse me on that. But what I'm saying is the overall sentiment is strong. Okay, so we're going to continue on. We're going to go with Apple. Apple on the weekly time frame is right at supply. It's right at this 50 EMA. Again, if the market does something crazy, and this is all just a fallacy, and we do decide to pull back, what I'm looking for is 141.47. If we start to lose that price action, I will short into 138, and anything below 137 is a macro flush into 134 and then back down to these lows. If Apple continues to push higher, I'm going to really need to see it get over 151.81. Then I would feel confident that we are on a nice move up. Over 151, 152 on Apple, we are looking at a price target of $171. That is what it is. That's what I said. Put it on record, 171 within the next 6 to 9 months. Let's look at Meta really quickly here. Meta, fantastic run. Meta has not had a red week in quite some time. I could see it pulling back. If Meta does pull back, 140 and 130 would be the pullback zones here, 20, 30 points. I could see it happening, consolidate before we start to take out the 50-day moving average here on the weekly time frame. I would like to see Meta get, Meta get over 167.66. That's bullish. Over 167.66, we've got clear skies into 200. That's where we start to swing trade, over 167 into that $200 price point. Let's quickly take a look at the big dog Google here. Google is still battling with some of this price action from November, but Google looks great over 101.25. Over 101.25 has room to 104 and 106. Those are the next two short-term price targets that I'm looking for on Google. Anything over 109 and 110, I'm looking for big boy money all the way into 120. That's what I'm looking for on Google. We're going to take a quick look at Netflix, kind of get these levels marked out. Again, Netflix looks like it wants to explode. Netflix realistically has been on a bull run since last year in May. Okay. Right, it is what it is. Look at what Netflix has done since May. Ever since May of last year, all it's done is consolidate and grind higher. Consolidate and grind higher. Consolidate and grind higher. Now we are finally starting to push up. Anything over 370 on Netflix has room to stretch into 400. That's our risk on trade for our potential swings. That's our risk on trade for our day in and day out scalps going to the long side on Netflix. Overall, I think Jay Powell, I think the Fed, I think everyone kind of, is exhausted. I think the shorts are going to be very, very upset, right? Some of the bears are going to be very, very upset. But it's okay. There's always room to make money for you guys. Even in a bull market, a bear can still make money. It is what it is, guys. And even we've been in a bear market for over a year, and bulls were still making money. There was still 2-3 week rallies. There was still intraday pushes higher. You just have to go with the trend and go with the flow a little bit more. There's not going to be as many opportunities in a bull market for bears, and there's not going to be as many opportunities for bulls in a bear market. That's just the way that it goes, but there's still ways and opportunities to kind of make money. I hope you guys enjoyed this video. Make sure to join the Discord. Guys, you do not want to be the guy who's coming in trying to learn how to trade when we've been on a massive bull run for the next 9 months, okay? That's not who you want to be. If the market continues to flutter, and let's say we go on a massive leg down, you do not want to be the guy trying to short, 6 months down the road when we've already put in its final leg. Don't be that guy. Learn right now, so that way as you can catch this next run, guys, whether it be south or long. You can catch this next run, put in the time, put in the effort right now, and quit messing around. It is what it is. Learn how to trade, learn technical analysis, learn how to create a trading journal, and journal your trades, learn risk management, learn this stuff. Learn how to trade options, learn how to trade stocks, learn how to, what's the difference between a market and a limit order? Half of you guys don't even know what the difference is between a market and a limit order. Do you know how to just quick market in, quick market out? Do you know how to set a limit order? Do you know how to set stop losses? Do you know where to technically set a stop loss? If you don't know these things, you should not be trading. You should be learning. Learn. I do recommend learning on real money, though. I really dislike paper trading. Okay, I really dislike paper trading. I know there's a lot of people who feel like they can learn better paper trading. It's just for me, when you paper trade, you have no skin in the game, right? So the emotions are different, right? And we are wired as human beings to be very emotionally connected and in tune to tangible things. And paper money is not tangible, so it's very hard to learn on that. It's like, being a baseball player and getting, soft toss from your coach, and coach is just tossing it up in the air. You can drive that thing, you can smack that ball, 300 feet every single time, but as soon as someone gets up throwing 89, 92 cheese, you don't know what to really do with it, right? So learn, and then ask questions and keep doing your research. There's a lot of great people teaching. There's a lot of people trading on a day-in, day-out basis. We've got a bunch of guys who are in our group doing it. But I love to see you guys there. I'll see you guys all in the next video. Stay safe. Hopefully you guys made some money today. Hopefully you guys have been making some money in 2023. We've been on a 3-week bull run. So hopefully you guys are making money and not trying to short. But with that being said, I'll see you guys all in the next video, and take care.